Don't forget, subscribe, say you like what I'm saying, and I'll send you more of that type of market wisdom based on my years of teaching, investing, and knowledge. Okay, so what's going on with Powell and what's going on with the rate? Powell basically said that he's going to be again data dependent, but he sounds pretty amenable to some sort of rate decrease. He didn't say he would do it, but he's saying that maybe now the time is going to come. But the point is, you need to be careful, right? Because Powell always says that he's data dependent. What does that mean? Well, he's going to be looking at inflation numbers. What is he looking at in terms of the inflation? He's going to look at the CPI. Now, of course, the CPI essentially looks at certain basket of products that helps you gauge whether or not prices are going up. Oil prices, rentals, food. But is it really what's going on in the real world? They're basically telling you right now, if you look at the latest CPI number, that things are going down. But when you go to the grocery store, right, you don't feel that this is what's happening. But then again, that's what's impacting you. Right? He's looking at what's impacting everyone. I mean, if you have a Tesla and you have electric, you don't care about the price of oil, quite frankly. So at the end of the day, what's important to you is what you're going to do with your portfolio. What are you going to do with your stocks? That's what's important. So you have to understand what he's thinking. You have to understand the data, and you have to understand what you potentially could do. So yes, if you listen to everyone, you listen to the pundit, looks like we're going to have a rate cut. But guess what? You're not the first one because the market is going up already. It's going up on the expectation of what's going to happen, on the expectation that rates are going to be cut. Is it too late? No, it's not too late because the rates haven't happened yet. So that means that there is some expectation baked into the number, but it's not fully baked completely. There might be some opportunity at some point. There might be some real opportunity when he actually announces it, but by that time it's going to be too late. So what I'm basically saying is that there's enough uncertainty out there to basically gauge the idea that there is going to be some sort of rate decrease. It's baked into it, but there's enough uncertainty for you to potentially benefit from that. Now, how do you benefit from something like that? You need to understand that the stock market is essentially a market of expectations. This is what we think is going to happen in the future. That's what we are buying and selling stock for. We don't buy and sell stocks as to what happened today because, frankly, it's already too late. Frankly, you're not that fast to trade on the information that quickly, and it would be illegal anyway. So basically, we are looking at the expectation in the future. So you need to know what's going to happen now in the future. So basically, this whole game is about predicting the future. This whole game is about thinking what's going to happen. This whole game is about being a Nostradamus. And this whole game, unfortunately, is very, very uncertain. Now, that's the reason why you could make a lot of money. But this is where you could lose a lot of money as well because you're banking on the wrong words. And quite frankly, if you cross the road every day and you close your eyes, when do you think and how quickly do you think you're going to get hit by a car? Right? So this is kind of the same thing with the stock market. You've got to be careful. You've got to realize that this thing is all about expectation. And if you're banking right, you'll be fine. If you're banking wrong, you'll be wrong. But can you be right every single time? Wow. So how do I make money? I know a lot of videos out there tell you buy this stock, buy that stock. This is what. No, you need to understand that you need a plan, right? And the plan really hovers around what you think is going to happen, and you need to be consistent. You think rates are going to go up? Okay, fine, then invest. But invest in what? Well, usually when rates, I'm sorry, not rates going up, rates going down. When rates go down, they tend to benefit tech stocks. And they do not benefit bank stocks, right? Obviously, because rates are going down, they're making less money, banks. So, yes, go for the tech stocks again, which is basically driving the S&P. So think about it very carefully. Make sure you understand what it is that you're buying. If you know what you're buying, that's one thing. But then when is it a good time to buy? Obviously, now would be a good time to buy because everything is baked into it. Not baked into it, like I said. There's still going to be more things happening in the future. So let's go for tech stocks. Great. But how do you go for tech stocks? Well, you need to understand, and I'll make a video on that. You need to know how to read an annual report and financials to understand what you're buying. You need to know what you're buying. If you don't know what you're buying, you shouldn't be buying it. Because not only here, you need to know what to buy, but you know when to buy. But that's crazy. So then the best thing to do is you just start small, invest a little bit every time, and ultimately, when stock starts moving up, then you make money. But when we say making money of stocks, what does that mean? What are you looking for? 10%, 20%? It's like going to a casino. How much money do you want to make in a casino? You could go and make 100% in 2 seconds. Is that enough? How much money do you want to make? On average, you should expect to make around 10% with stocks over time. Oh, you want to make, you know, you want to make 5,000%, right? You want to make this guy that we see all the time promoting the kitty thing, right? Where he makes lots of money very quickly by investing in GameStop and all that. Well, good luck because you better know what GameStop is about. You better know what these stocks are all about. If you don't understand what a stock is about, you shouldn't be buying them. So what is the plan? Well, the plan is tech stocks. The plan is maybe we should spread it out a little bit if you don't know what you're buying really, and if frankly you don't know when this thing is going to hit. So you start a little bit every day, which is what you should be doing all the time, right? Dollar cost averaging. A little bit of this, a little bit of, but what? Do I buy a single stock? Do I buy a bunch of stocks? Do I buy a portfolio? Well, if you buy a single stock, obviously the potential is there also to make lots of money, also to lose lots of money, because if you don't know what you're buying, you're in trouble. Okay, so let me buy a portfolio. Well, but what we found out recently is that portfolio managers tend to not want to buy all the stocks that are doing well because otherwise they need to diversify, because otherwise, let's say they buy Nvidia, right? Nvidia is that part of the portfolio. Nvidia goes up in value. By the end of the thing, by the end of a month or two, Nvidia becomes 80% of your portfolio. Portfolio managers will get fired if they say, hey, keep it riding, keep it riding. I say, you kidding me? You have one stock that makes 80% of your portfolio? We can't let that happen unless you're Warren Buffett that doesn't believe in diversification, but he's the boss, so he can decide what he wants. These are complex issues, and you need complex issues, and you need to understand what you're getting yourself into. Otherwise, you're going to get hit. Now, of course, you could do all these things right. You could be buying the right portfolio, you could be buying the right stocks, and you could be buying a portfolio that's doing well, that's diversified. No, it's not doing 100%, but it's doing 50%. But if there's a crash, all bets are off. But be careful, because if you're starting investing today, which sounds great, right? Maybe you catch all these things right, and the stock is doing right, and the portfolio is doing great. So what are you going to do? You're going to hold on to it, right? You're going to hold on to it because rates are coming in, rates are coming down and down and down, and markets going up and up and up and up, and you're doing fantastic. Keep in mind that one thing's right now in terms of the elections that candidates are not really talking about, both of them, Republicans and Democrats. What are they talking about? Well, they're talking about abortion, they're talking about the border, right? Things you could relate to, understand. Do you hear anyone mentioning anything about $33 trillion worth of national debt? Okay. What does that mean? Do you realize that at some point we will not be able to make payments on that debt? We will not be able to. It doesn't matter what you do. Why? Well, about between now and 20 years. Now, the market is not focused on that, which is a good thing. If the market is not focused on that, you are not going to hear about it. But at some point, the market is going to say, hey, but listen, I mean, 10 to 20, I think 5%, 5 to 10% of the debt right now is used to service the interest, which is almost the size of the national defense spending. That's a lot of money. So when do you decide that it's too much? Right now, the market is not focused on that, which is great. So here you are making money on your portfolio, making money on NVIDIA, you're writing it, you're 10 years older, 15 years older, and then you're about to retire. And then the market says, hey, you know what? I'm going to start focusing on this debt because this is not a $50 trillion, and at some point we can't make the payments. So therefore, we're not paying our debt. Imagine you're $50 trillion and you don't pay anything. Do you know what's going to do to the reputation in the U.S. in terms of paying its debt? We will be devalued. We will be derated. We will be downgraded. I mean, it will be a mess. So, and I'm telling you all these things not to confuse you, but so to realize that the market is like that, looking up and down the spectrum, trying to figure out what is going to happen next. And you got all these people thinking about all these things at the same time. And here you are with your 10, 50, $100,000, trying to, well, where am I going to make money? And of course, as you're trying to make money, you're not focusing on trying to protect your capital. We're mostly focused on making the money because that's easy to understand, right? You're able to know if you're making 10%, you're making more than 5%. But do you know how to measure the risk of this portfolio? Well, I don't care about that. Why do I care about measuring the risk? You do need to worry about the risk because when you cross the street, don't you look left and right? But yet, when it comes to your portfolio, it's okay. I want to make 100%, then I'm getting out. You don't think that way. You got to make sure you have a plan. You got to make sure you understand. You got to make sure you realize that this thing is a lot more complicated than you think, and it's going to take a lot longer. It's going to be fraught with uncertainty. Now, maybe that's the reason why you should diversify it in things, but in things that you know. Real estate is a good idea. Real estate is a good idea because it's a lot of tax deductibility, it's more recurring income. But again, you need to know what you're getting into. You're not going to buy houses and sit home and do nothing. It's a job. It is not passive income. I'm telling you all this so you have a lay of the land. You have a lay of what's going up, what's coming up, what's going on, and you have to realize that all these things in the sky and here, they're all moving at the same time, and you need to kind of find your way. Now, of course, like I said before, you don't need to worry about things like that. Just dollar cost average. Of course, you're not going to make that much money, but there is no such thing as easy money. If you listen to them, yes, you buy this stock and buy my book and buy my approach, and then you'll go along with that approach. You go along with that book. But quite frankly, there's no easy fix. They're making the money. They're making the money. They sold you a book. They sold you an idea. But do you really? Did you really make any money? That is what you need to worry about. So the question is, what do? We watch, we invest, we are prudent, we understand what we're buying, we know when to buy, and we realize that we don't know. You need to understand that you don't know.